Gary Dehart here with Insightful Accountant, and our speaker is Mike Milan. Mike, welcome to another episode of Cash Flow Talks. We certainly appreciate you being here. But before we get started, I always have a question of the day when I get to do these. So, my question of the day, I'm going to make it easy on you. It's a question I have used already. I don't think I've asked you this, but we just came out of 4th of July. What was the one must-have food for 4th of July?
Hey, I'm Texan. If you don't have brisket, then you're not Texan either.
That's what I thought. That's what I thought you would say.
Yeah,
And
yeah.
2 weeks ago, I asked that question to a Texan. Now she was in Houston, so maybe you guys might like, I don't know, there are more city slickers in Houston. I don't know. She did
What
not
she
say
had?
that. She said hot dogs and hamburgers.
Oh, yeah.
I know.
She's the import. She's transplant.
I was very disappointed. I was expecting brisket, but what can you do? What
Uh,
can you do? All right. So Mike is going to take us through finding the right balance, help you analyze cost and pricing structures, balance competitiveness and profitability, and align pricing strategies with your business goals. Before I turn it over to him and get started, we do have one really quick poll question, and that is just about our Be Insightful premium content program. It's basically currently have nine training tracks in this program, everything from a personal coach to migrations, human resources, marketing, technology, tax, as well as a couple of others, business development. And so the question is, would you like some information on it? It is currently it's $49 actually it's a dollar for the first month, $49 a month after that, or I think one-time flat fee or annual fee of $4.99, I think is what you'd find on the website. So if you would just take a minute and let us know if you'd like some more information on that, we'd love to share it with you. And otherwise, if you say no, then we will not send you any info. This will be recorded. It will be available on our YouTube channel, and we'll also send you a link to the YouTube channel after this, just as the overall follow up for this event. So, Mike, thank you so much for being here. Appreciate you again taking time for this. One more question for you. You weren't at scaling, is that correct? You were not there.
No, I thought it
Okay,
was on Father's Day and I had plans, so I didn't go. Next year. I'm gonna be there. I'm gonna be there next
gotcha.
year.
Yes, yeah, good. 'Cause I just wanted to make sure I didn't miss you. I didn't think you were there, but
Yeah.
so all right.
Hey,
Well, very
welcome
good.
back. Yeah, welcome back to this, right? I've missed you the last couple of months. I mean, you've been busy, you've been
That's
out
right.
there. You're everywhere, right? Everywhere I see you are out in the world. So thank you for all you're doing with Insightful Accounting.
Appreciate that. I don't get out enough. I spend too much time here in my desk. Although this was the last time I saw you, that was from that trip. This over my shoulder here.
I
That
remember.
that was from Utah. So, all right, my friend, we will talk soon.
See you then. All right. Hey, live from San Antonio's Cash Flow Mike, and we're going to be talking about pricing today, right? We're talking about pricing, and I'm going to make a bold statement. If you disagree, if you want to push on this is okay because I love when people try to push on stuff. I'm going to say this: price doesn't matter, right? So if you want to push on that, put it in chat. Say, Mike, you're full of it. You're crazy. You don't know what you're talking about. However you want to put it, or you can say, you're right, Mike. Price doesn't matter. So who agrees? Who doesn't agree with that? Price doesn't matter. All right, nobody. Nobody has an opinion. All these familiar names: Kathleen, Jean, Carrie, John's out there. So uh, let's talk about it. So why am I doing this? Every month, I volunteered to do a cash flow talk, right? Cash flow talk for Insightful Accountant because I'm on a personal mission to eliminate cash flow as a reason that businesses fail, right? That's what I'm trying to do because I want bankruptcies to reduce. I want people to have more cash in their pocket. If you fail in business, it's not because you run out of cash. It's going to be something else. The market doesn't like your product. You get in a fight with your partner, something like that, but it's not going to be because you run out of money. So I made a big, bold statement. And about price, price doesn't matter, is what I said. So here's what I think. Oh, we got one person in the chat already. Chat is now open. Mike, we're not being quiet. Chat wasn't on yet. Okay, Denise, good, good, good. So let's do this. While we're thinking about it, I'm going to do a small experiment, right? Small experiment because I just told you something that maybe you agree with, maybe you don't. about price doesn't matter. I'm going to give you a word. Here's the experiment. I'm just going to put a word up here on the board, and I want you to tell me how much you would pay for this or you have paid for. And I'm talking about the highest amount. What's the most amount of dollars you would come out of pocket for, right? For this product. And you can't say, I would never buy that because even if you don't need it, your grandmother does. So you're going to buy it for grandma. So that's what we're going to do. I'm going to write a word. You put in chat, what's the most, the highest you would pay? You wouldn't go a dollar more. So let's just start here. I'm going to put a bike. How much would you pay for a bike? Just throw it in chat. Let me see some numbers. How much would you pay? How much would you pay? Nobody's put one in yet. How much would you pay for a bike? 200, 250. Got it. 200, 250, 4,000. 4,000, Jonathan. Right? So $4,000. So anybody lower than 250? Anybody lower than 250? 99. Michael's at 99. All right, so $99. So let me put that down here. $99 is it? I hope that's a new bike, Mike. I hope that's a new one, not a used one. But $99 is the most I pay for a bike. Grandma, that's the best bike you're going to get. And Jonathan went to 4 grand. I've seen that number as high as 16 grand when I've asked this before. So $4,000, right? 4K. Should have just put 4K. All right. So we got that. Let me do one more. How about a candle? How much would you pay for a candle? Now, I know there's somebody on this call that's buying those Yankee Doodles or those Scentsies, but how much would you pay for a candle? And what am I seeing? $6.50. Chastity's going to buy one birthday candle. That's, oh, $2, right? $2 low, $2, $2. I just need one. So nobody's like, trying to prepare for natural disasters or anything like that. They just want one candle for $2. 20. Somebody's buying these $75 candles. I'm telling you, I've seen them in people's houses. So somebody's doing it. Somebody on this call is probably doing it and they're afraid to put it in chat. All right, so we got 650, 20, 650. Where's the 650 candle at? Jeez, is that Target? Okay, so $2, and we got what we got up here? My daughter, yeah, my daughter. There we go. So $2, and then I think what I see a $20 one. Randall likes $20. Stephanie likes $20 candles. Jennifer, okay. Denise, so to 20. So one more. I'm gonna do one more just because, and I'm gonna say a bottle of wine. How much would you pay for a bottle of wine? Remember, you can't say, "Oh, I don't drink." Grandma does, so she needs it. So, how much would you pay? What's the most you would come out of your pocket for a bottle of wine? Anybody? Bottle of wine, bottle of Yankee. Oh, $100. Okay, $30, 15. Somebody's doing $2 chuck. 150, 300. There we go. So did I see 100? Yeah, I saw 100. I saw 15. There we go. So we got 15 on the low side. And we got, what was it, 150? Is that on the high side? Okay, 150. All right, so what's the point? Why do this exercise? What's the point? Well, the point's this. I told you that price doesn't matter. We have a small group here today, not too many people, but believe it or not, even with a bike, there's a $4,000 swing. Even if a candle, there's a $20 swing. Even if it's a bottle of wine, there's almost $100, $135 swing. It doesn't matter your price. There is a buyer at every price point. What you have to do is figure out where you want to sell. What do you want to sell and where do you want to sell it at? So that's where we get into pricing today, is knowing that price isn't the thing. It isn't the thing that matters. The value you deliver is what matters, right? Because there's a such thing as value proposition. And that's really what we're talking about. Value proposition is perceived cost minus perceived benefit. So what does it cost, or what's the benefit minus the cost? But overall, we want that to be positive, right? So a couple different things, cost and benefit, they kind of have to equal out to make it worth our while. Well, let me go to this. I say price is about the value proposition. So look at this, right? It's Rolex. Rolex, I mean, how is it's just a watch. When you get right down to it, it's just a watch. But it's a pretty well known, pretty, high price, high dollar luxury type item. There's a company out there, and I'm not talking about fakes. I'm not talking about the ones that are absolute rips off, just absolute fakes. I'm talking about the ones that they call knockoffs. And knockoffs are not fakes. They just look like the product, but they're not trying to imitate them. There's a company out there called Cadison, right? And Cadison makes watches that look like Rolex, right? They just kind of look like it. Now, I'm sure if I wore a Cadison, it would feel different than a Rolex. But for some people, the look is similar enough that they won't matter. It doesn't matter to them. So the price of the Rolex, anybody want to guess in the chat how much this Rolex cost, this Oyster Datejust? Yeah, $12,850. The price of the Cadison still kind of looks like a Rolex. See how the shape of it is? They even use the same bezel. Some of them don't have the bezel, like the Rolexes have this the rippled effect. The way this clasp connects, it's very similar. You can get that one for $89.97. So again, there's a buyer at all price points. If you want a similar looking Rolex, you can get it for almost no dollars. So there are four major pricing strategies. If you talk to QuickBooks, they're going to tell you there's 14, but there's really four major ones, and then there's subcategories of all of these, right? There's a cost-based, there's a value-based, competition-based, and dynamic pricing, which changes in real time. So here's where you see these in the marketplace, right? Here's where you see these in the marketplace, right? So yeah, Jonathan's got, what is it? 349 Titan Pioneer Hardtail men's speed bike. Sweet. All right. So when we're looking at different things, when we talk about cost based, it's this is how much it cost me. Then I have a markup over the top of it. And you're normally going to see that at places like Walmart, right? Because they're low prices, but it's cost and they're trying to get a certain markup over the amount that it costs them. Now, what they try to do is keep prices as low as possible. So they are actually leveraging their relationships with the vendors. They're trying to get the cost of their products as low as possible so they can pass on lower costs to their customers. Value-based pricing, and you probably didn't know this or not, but Tesla is a value-based pricing model, right? They don't worry about cost. It's all about the perception of the buyer. It's the technology, it's the self-driving, it's the because they're pretty basic cars. When you sit inside them and things like that, they're pretty basic. They're not luxurious like you would think some luxury cars are, but they're able to get a premium for electric cars because of the name recognition, the technology that's inside, and keeping costs low as well. But realize this: Tesla doesn't have an advertising budget, right? You don't see a lot of commercials out there for Tesla. It used to be the same way with Mercedes, but now you're starting to see Mercedes actually get into advertising. When we talk about positioning against competitors, right? So JetBlue was an airline company that they would look at all the competitors' pricings, and if they had overlapping flights, meaning the same routes, they would go and look at Southwest or anybody else's pricing and just try to be below that, right? So all of theirs was about what is the competition charging, and we're going to be below that. Ignored cost once again. And then dynamic pricing is something that we all probably complain about. It's Uber, right? Have you ever heard of surge pricing when demand is high? So they're changing prices all throughout the day, depending on the amount of customers are out there asking for at any given time, right? So it's one of those things where that's dynamic pricing. So these are the big four. When we're talking about ourselves, though, right? Do we fall into one of these? And there's one that I tend to lean towards more than others, right? And I tend to lean towards value pricing, but even if you're value pricing, you've got to set kind of a lower floor, right? I mean, I think even Ron Baker says, hey, you still got to understand your cost because it sets the floor, the do not go below number, right? Then you go above. But to understand value pricing, you've got to understand that there's a such thing as the value equivalency line, right? VEL, value equivalency line. This is where perceived price is equal to perceived benefit. I'm getting what I paid for. That's basically what they're saying. I'm getting what I paid for. Now, the example I always use when I'm in seminars or in lectures and things like that, I say, in your town, how much is the average hamburger? And some people will tell me, oh, it's $12, right? If I go to a standard restaurant and I look at a menu and I see $12 for a hamburger, well, that seems okay, right? But sometimes it's lower, sometimes it's higher, right? Sometimes, and this is what I'm saying, the price, $12 is worth it. But when you really look at a hamburger, it's a patty, a bun, and some garden stuff. That's really all it is. And it doesn't matter what restaurant you go to, that's what you're getting is a patty, a bun, and some garden stuff. But there's some places where I can get a hamburger for $5, right? Now, why do they sell at $5 when everybody else in the market thinks $12 is normal? And there's still other places where I go in the burger when I open up the menu is $18. So this is the value equivalency line, and where I price is there. So the expectation is this: if I'm buying a $5 hamburger, that the perceived benefit is lower than the $12 hamburger. And then the perceived benefit for the $18 hamburger is higher than the $12 hamburger. I get a different experience because it's perceived benefit and perceived price. Well, anytime it falls outside of this value equivalency line, and let me explain what this is. On a $5 hamburger, what do I expect? Well, probably it's one of those places where the chairs are bolted to the ground, and the only way they clean it at night is they bring in a garden hose and they squirt down the whole place, right? And they serve it to you in just a plastic wrapper and say, "Here you go." In the $18 hamburger, maybe it's different. Maybe they got music, the lights are down a little bit lower, the guy's got a towel across his arm, maybe there's a view of the lake. The difference is I'm not paying for just a hamburger. I'm paying for the other things around it, the perceived benefit. I wanted to go to a nicer place. That's how I can charge a little bit more. It's not the hamburger. Remember, I'm buying a hamburger at all three of these places. But what happens if I'm off this line? I get kind of off of it. And you know it. Even if you can't do it mathematically, you know it in your gut when it's not on the value equivalency line, right? Because either that person, that company is destroying the value of their product or they're creating more value with their product. For instance, if I paid $12 and got an $18 or $20 experience, I would think, hey, that's worth it. Matter of fact, we use words like that's a bargain, right? Right? Because I only paid $12 and I got this much value. The other side of that is what if I pay, $12, but I don't get that much value? I only get like $4 worth of value, right? I think I'm being ripped off. So when you're feeling that, that's the gut feeling like, it just wasn't worth it. That's the way I want you to look at your own product. Would you pay what you're offering yourself? Or do you think it's a bargain or do you think it's a ripoff? My hope is that you're somewhere in value creation, that you're giving more than people expect, or you're giving exactly what they expect, because that's how you keep people, feeling like your product, your service is worth it. Are you a ripoff or are you a bargain? So remember that when you're looking across, pricing. So here's some pricing basics, right? Let's see who can do these. What is, if I buy a shirt for $26 and sell it for 40, what's the gross profit margin percentage? That should be pretty easy. This is just kind of pricing basics. What is the profit percentage? Oh, unless it has ribeye meat. There you go. Jonathan knows. Or Wagyu patties and those type of things. How much gross profit percentage do we get if we buy a shirt for $26 and sell it for 40? Who's got an answer? Anybody? Nobody. Get the calculators out. All right, 35% is what you should have got, right? Is what you should have got, 35%. Now, that one's pretty easy, right? It's 40 minus 26 equals 4. Is it 14? 14 divided by 40 equals 35%. This one here, though, is the one that most people get wrong. I buy something for $54 and I want to make 25% gross profit. How do I know I want to make 25%? Well, maybe that's what I've always done. I've always made 25% in gross profit, or that's the industry average or my new goal. It doesn't matter, but I want to make 25%. I'm going to show you how you get to that number next. But 25%, if I want to sell something or I buy something for 54 and want to make 25% on it, most people get this wrong. And I've had clients go reprice their whole store or reprice their services based on this question. And it seems simple enough, but some people, like Curtis, got 72. Awesome, right? 72. Randall, 72. Good. Some people will get this. Some people will get 67.50. And how do they get that? They take 54 and multiply it by 1.25, or they take 25% of 54 and add it back to 54. Either way, you're going to get 67.50. The most incorrect answer I get in the world is 67.50 because the correct answer is, of course, 72. That's what you're doing. You're leaving money on the table when you do your pricing incorrectly. The correct answer is 72. And you're like, well, how did you get there, Mike? Well, I teach this technique called the mini P&L, right? And in the mini P&L, what we have, how much time I got? Oh, I got plenty of time. Mini P&L is where I strip all the noise out of the profit and loss statement. Just strip it all out. This is just two different versions of it. I know it looks a little messy. I could have cleaned that up, but just two different versions. But the mini P&L is worked just like a Sudoku puzzle or Sudoku, or I don't know how to pronounce that thing. I always mess it up, which means that I'm going to put sales, cost of goods sold, gross profit, operating expense, net profit, just down one line. And then I'm going to create boxes on both sides. I'm going to have the left side is in dollars, the right side is in percent. And to solve like word problems, I just fill in the blank, right? So, hey, I bought something for $54. I want to make 25%. I just threw this in there just so we'd have something to work with. Maybe I spend 15,000 or 15, 150,000, doesn't matter, 15 a month or a year. So if that's true, then I ask the question, if this is true, what else is true? Well, everything is a percent of sales, so sales is 100%. 100 minus 25 or minus a number equals 25. Well, that's 75%. So now we know 54 has to be 75% of sales. If I want to know a number that's larger, I divide. If I want to know a number that's smaller, I multiply, right? Rule of math. So 54 divided by 0.75 when we convert it equals 72. And if we did the math, 72 minus 54 equals 18, 18 minus 15 equals 3. That's what it would look like in Excel. I go, oh, I'm going to make money. We're going to have profit at the end of the year. It's going to be great. Everything's going to be awesome. Then I turn to somebody in my office and say, hey, here's the pricing gun. I want you to go mark up everything to 25%. I want to make 25% on everything in this store. The person with the pricing gun goes to their desk and says, oh, that this item here for $54 should be $67.50. And then they go around the store and go $67.50. Click, 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 all around the store. Now everything's marked up what they think is 25% because they mispriced it. So if I mispriced it at $67.50, it didn't change the cost of what I have to buy. So now I'm only making $13.50. Now, the reason I call it a Sudoku puzzle is because there's only one number that fits in any one of these boxes. So if that's true, that means I want 25%, then this number here should be 25% if it's right. So 1350 should be 25% of 6750 if the price is right. Is it right? Well, no. If we take 1350 and divide it by 6750, you're going to get 20%. We left 5% in the pricing gun. Then we carry that through 1350. Cost didn't change. Operating expense didn't change. I lose money. At the end of the month, at the end of the year, we saw we lost money. So what happened? And it was too late. We had already priced the goods wrong. And there were so many of them in the store, we didn't realize that this happened. But we hurt ourselves by pricing it incorrectly to begin with. So what do you do here? How do you figure this out? Well, here it is, kind of the mini P&L. Now you notice I added a couple things under net profit. If you're in my course, The Clear Path to Cash, I preach that everything starts with this number, which is transferable value. This is the amount of money that somebody needs from their business to do whatever it is they want to do next. And this is not their salary. This is money that comes out of net profit to fund their dream. Your goal, Your job as an accountant, as an advisor, is to help somebody fulfill a dream. You are in the dream fulfillment business. That's what it is. So using the same type of methodology, mini P&L, dollars, percentage, 100. I'm just going to start filling things in. And if you start with the end in mind, I know that I need 10%. Why? Because everybody else makes 10%. I'm just making up numbers here to make it easy math. But if I want 10% net profit, the next thing I need to know is, of that 10%, how much of it needs to come to me, right? To fund my dream. I want to put this away on a regular basis. So $50,000 of whatever this is, because I calculate this using my technique in clear path to cash, is 50,000. Well, what else do I know? I know how much I spend per year, right? My operating expense. We're going to say that's 300,000. Well, the other thing I know is about how much I can sell. I either did it last year or I'm forecasting it for this year, right? I know about how much I can sell. So now you're starting to see this thing starting to flush out, right? And this is an easy way to describe it to your clients. So what else do I know if this is true? Well, now that I know I'm going to sell $1 million, I know that the net profit is 10% of sales. Well, that's $100,000. Now I've got another number to fill in. If this is true, 50 plus a number equals 100, right? Use your calculators. Yeah, it's 50, right? 50 plus 50. 50 for the company. I'm not taking all the money out of the company. I'm leaving some in for growth, for, emergencies, to build up my cash reserve, whatever that is. And I'm only taking out what I plan to take out, right? This is when people say, I don't know how much to do in distributions. I tell you how much to do in distributions. And when we do the cash budgets, we can figure out exactly when it comes out of the company so we don't hurt it. It isn't just like, I want a boat this month and I go get it. Well, now if we know this, we know we're going to make 100,000, we're going to spend 300,000. How much do I need in gross profit? Remember, gross profit is the most important number in the income statement. It is the only place that you can get money to spend on your expenses or put in your pocket. This is the one I manage to. Sales is only a measurement of how much work you do. That's it. You can only spend gross profit. So I need $400,000. I need just to fund my plan. Remember, a budget is not a restriction, it's an intention. I intend to do this. I intend to spend 300,000 and keep 50 for me and keep 50 in the company. So 400,000 now is $1 million. That's 40%. Now I know what I should be pricing it at, right? I need 40%. When I told you in the very beginning, I need, 25%, this is how I come up with it. I need 40% to fund my business, to keep it running. So what do I do with this? You're like, okay, well, how do I price if I know that gross profit is 40%? Well, this is where you can calculate your multiplier. If you're in the clear path to cash, I got all these cool, spreadsheets and stuff for you to use. But in this case, I'm just going to show you the math, right? If this is true, I'm selling $1 million. I want 400,000 left over. Then we can fill in the rest. That means cost of goods sold is going to be 600,000. And that's going to be 60% of sales. So I'm paying for my stuff. I need to keep my cost around 60% of my price, what I'm going to sell it at. If that's true, here's how you calculate the multiplier. You're going to take 1 divided by the cost of goods sold percentage, and that's what you use to multiply. So in this case, I want 60%, but I'm going to do it at 1.67. So if I have something for $10, I multiply it by 1.67, and that means I charge $16.70 for the product. So we're coming right up on 10:30. I'm getting really good at nailing this thing from a time perspective, but if you want to know more about what I do have a free video course that you can get, the 7-minute conversation. It's free on my website. Just go to cashflowmike.com. I got a free Facebook group called the Clear Path to Cash, where I've got probably those pricing calculators are in there. You just grab them, from the Facebook group. I got a podcast called Mike and Blaine, Business Beer and BS. And if you want to know more about me, I'm Cashflow Mike. You can reach me at mike@cashflowmike.com. Love doing this, Gary and Matt. I really appreciate you guys, and we'll see you next month with something else cool.